SLX has been listed on Bybit Futures, opening a new avenue for traders to engage with the token through derivatives. This listing introduces a perpetual futures contract, SLX USDT, on one of the largest cryptocurrency exchanges by trading volume. The contract allows traders to take long or short positions using USDT as the settlement asset. This is a concrete development in the derivatives space, where exposure to SLX can now be managed through leveraged contracts without needing to hold the token directly. The listing is part of a broader trend where altcoins are increasingly being offered on major futures platforms, expanding trading options for both retail and institutional participants. Perpetual futures contracts, like the one now available for SLX, operate differently from traditional futures. They do not have an expiration date, allowing traders to maintain positions indefinitely, provided they meet margin requirements. This is facilitated through periodic funding rates that adjust based on market conditions, ensuring the contract price remains closely aligned with the spot price of SLX. These funding rates are crucial for maintaining market stability and preventing price divergence between futures and spot markets. Traders on Bybit can now monitor these rates, along with order books and open interest, to make informed decisions about their positions. The contract is USDT margined, meaning all trades and settlements occur in Tether. This is a standard setup on Bybit and is common for altcoin perpetuals. However, the leverage available for this listing is likely conservative in the early stages, as is typical for new. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Futures contracts. Bybit often starts with limited leverage tiers for new listings and gradually expands them as liquidity and trading activity increase. This cautious approach helps mitigate risk during the initial phase when market depth is still developing. Traders are advised to check the contract specifications on Bybit's platform, including maximum leverage, minimum order size, and any initial restrictions that may be in place. These details are essential for understanding the risk profile of the contract and determining whether it aligns with a trader's strategy. Futures trading inherently carries liquidation risk, and positions that fall below the maintenance margin threshold will be automatically closed. This mechanism is designed to protect the exchange and maintain market integrity, but it also means traders must actively manage their positions to avoid unexpected closures. The impact of this listing could be significant for SLX. Derivatives listings on major exchanges often increase market visibility and liquidity, potentially attracting new buyers and sellers. The availability of futures can also influence spot prices, as futures traders may act on price movements or hedging opportunities. While the exact effect on SLX's price is uncertain, the increased exposure could lead to higher volatility, especially in the early trading period. This is a common pattern in crypto markets, where derivatives listings can act as catalysts for short-term price swings. One of the key uncertainties is how much institutional or retail interest will materialize around the SLX futures contract. If the contract gains traction, it could signal broader adoption of the token beyond spot trading. However, if trading volume remains low, the impact on SLX's price and market dynamics may be limited. Traders should monitor open interest and funding rates to gauge market sentiment and position activity. These metrics can provide insights into whether the futures market is bullish or bearish on SLX. Another important factor is the initial leverage settings. If Bybit sets low leverage tiers for SLX, it may limit the contract's appeal to aggressive traders looking for high-risk, high-reward opportunities. Conversely, if leverage is expanded quickly, it could attract a wider range of participants and increase trading volume. Traders should be aware of these changes and adjust their strategies accordingly. The next signal to watch is the opening interest of the SLX futures contract. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Rising open interest suggests increasing participation and could indicate growing market confidence in the token. Conversely, declining open interest may signal a lack of interest or a cooling market. Additionally, traders should keep an eye on the funding rates and how they evolve over time. Significant changes in funding rates could indicate shifts in market sentiment or imbalances between long and short positions. In summary, the listing of SLX on Bybit Futures marks a new chapter in the token's market presence. It provides traders with a new tool to express views on SLX's price direction, and it introduces new liquidity to the market. The next steps will depend on how the futures market develops and whether the contract becomes a significant part of Bybit's derivatives ecosystem.